How much is the war in Iran actually affecting your investment portfolio? Join me as we look at how different sectors or assets of an investment portfolio are being affected. The war in Iran is shocking prices, our nerves, and our expectations on inflation. And for both the existing and new investors, this war means more volatility and faster rotations between winners and losers. But what is actually happening? The core crisis is in the Strait of Hormuz. Because of the war, tanker traffic has slowed down and at some point it has stopped. This has led traders to scramble for alternative barrels and routes. But how does war translate into market chaos? With the Strait enclosure, a significant chunk of global oil supply has been disrupted. This has led to global oil prices rising. And if global oil prices rise, this tends to add a proportional percentage point to global inflation. And this affects everything from food to electricity to airline tickets. Because of our appetite for energy, a rise in energy is a global tax on consumers and businesses. This will cause inflation to keep overall prices of goods higher. For an investor, this means interest rate cuts may be slower and smaller than expected before war. Because of this war, some of us have panicked and have sold their assets linked to the Middle East and emerging assets, and in return, they have put their trust in the US dollar as their safe haven. But we all know the problem with using the dollar as a safe haven. This has resulted in a strengthened dollar index as regional bonds and equities in the Middle East came under pressure. But rushing to the US dollar will create yet another problem. A stronger dollar tends to hit commodities priced in dollars in countries that rely on external funding. The combination of geopolitical fear plus a strong dollar amplifies volatility across investment portfolio, even in countries far from the conflict. I know some may want to take the risk. You may have the appetite. So let's look at who is winning and who is losing in a portfolio. Due to spikes in prices, some majors and traders have actually made huge profit. This is because they are selling the products whose prices have just jumped. You know the math. I will not talk about it. These guys are not making money. Operations are seeing high day rates, and it is also risky to cross the strait. Insurance costs are huge and not worth it. It's a bloodbath for airlines and travel stocks. Jet fuel is even more expensive, and most travelers are delaying their trips, resulting in lower margins and demand. Since prices of fuel are higher, and if a company does not pass the expense to the consumer, margins are getting squeezed. There is nothing more to say about this sector. It's bad. Food prices are rising everywhere. Fertilizer and energy problems raise production costs. Companies are still producing huge volumes, but profitability may be pressured. Recession, recession, recession. It has always been risky to invest in this sector, according to my own view, but this time it may get really risky. But on another side, you might win. Who knows? High rates help loan margins but hurt borrowers and raise chances of defaulting if growth slows. Rising yield may push prices down, especially for long-duration government and corporate bonds. This will result in sell-offs. If you have been investing in gold, you may have seen gains. This is because some investors are seeking protection from geopolitical risk and inflation. They see this as a store of value when everything feels fragile. So, what does this mean if you are already investing? It only means you might be winning or losing right now. On a serious note, if you have invested in the energy sector, you are probably seeing windfall gains. For some investors, it is what it is. But someone is saying, I actually want to start investing now. Well, investment decisions should be tailored to your individual financial situation. 2026 feels definitely the worst possible time ever to invest. But here's something to think about. 1. Volatility is the price of admission. 2. Start small and be systematic. 3. Know your horizon. Please, please, please. So, before we end this video, this war may hit 3 main channels. 1. Energy shocks. 2. Inflation and interest rates. 3. Risk appetite. Thank you for watching, and remember that things rarely calm down. Today is war, tomorrow is something else. But investors who learn to move through chaos are the ones who win in the end. Cheers!